Bitcoin has managed to hold its ground firmly around the $66,000 level in recent trading sessions, even as broader market sentiment remains cautious following a sharp correction from the all-time highs near $126,000 reached in late 2025. This resilience at a key psychological and technical threshold has ignited fresh debate across the financial community, with many now asking whether this consolidation phase represents the quiet buildup before the next significant upward movement in cryptocurrencies, or simply a temporary pause in a more prolonged period of sideways trading. Welcome to Crypto Hub, your trusted source for clear, data-driven coverage of the cryptocurrency markets and the forces shaping digital asset prices worldwide. In this professional news update, we take a detailed look at Bitcoin's current positioning, the factors supporting or challenging a potential breakout, and what the data from on-chain metrics, institutional flows, and macroeconomic conditions suggest about the road ahead for the leading digital currency and the wider crypto ecosystem. Over the past several weeks, Bitcoin has demonstrated notable stability in the mid-$65,000 to low $66,000 range, rebounding from intraday lows near $60,000 earlier in June and successfully defending the $66,000 zone on multiple tests. This price action comes after a substantial pullback from the October 2025 peak, a move that erased more than 50% of the prior advance in some sessions and triggered widespread liquidations across leveraged positions. Market observers note that such holding patterns have historically preceded major trend reversals in previous cycles, particularly when accompanied by improving fundamentals and reduced selling pressure from long-term holders. The question now is whether the conditions are aligning for a sustained push higher, or if external headwinds, such as persistent inflation readings and shifting expectations around central bank policy, will keep volatility elevated and cap upside momentum in the near term. To understand the significance of Bitcoin maintaining the $66,000 level, it helps to place the current environment in the context of the post-halving cycle. The April 2024 halving reduced the block reward and historically set the stage for accelerated price appreciation in the 12 to 18 months that follow, a pattern observed in both the 2016 to 2017 and 2020 to 2021 periods. By mid-2026, the market is well within that window, yet price discovery has been complicated by the maturation of the asset class. Spot Bitcoin exchange-traded funds, which have accumulated hundreds of thousands of BTC since their launch, experienced periods of strong inflows earlier in the cycle, but have more recently seen stretches of outflows exceeding several $100 million in aggregate. These flows reflect a mix of profit-taking by some institutional participants and rotation into other assets. Yet the net effect has been a gradual absorption of supply that continues to underpin the price floor around current levels. Corporate treasuries have also remained active, with entities such as MicroStrategy continuing to signal long-term conviction through periodic purchases, reinforcing the narrative of Bitcoin as a store of value rather than a purely speculative vehicle. Technical indicators provide additional color on why the $66,000 area carries weight. This zone aligns closely with the 200-week moving average, a long-term trend line that has served as dynamic support during previous bear market bottoms and consolidation phases. On shorter timeframes, Bitcoin has formed a series of higher lows since the June dip, suggesting that buyers are stepping in at progressively higher prices. Resistance overhead sits near $70,000 and then $73,000 to $75,000, levels where selling interest has previously intensified. A decisive close above these thresholds on strong volume would likely trigger algorithmic buying and short covering, potentially accelerating a move toward the $80,000 to $90,000 range in relatively short order. Conversely, failure to hold $66,000 could open the door to a retest of the $62,000 to $60,000 support band, where deeper liquidation cascades remain a risk if macroeconomic conditions deteriorate further. On-chain data offers a more granular view of participant behavior during this holding period. Long-term holders, often referred to as the market's strongest hands, have shown mixed signals, with some distribution occurring as prices recovered from the lows, yet the overall supply held in illiquid wallets remains elevated compared with prior cycle peaks. This suggests that while profit-taking exists, a core cohort continues to view current valuations as attractive for accumulation. Exchange reserves have stabilized rather than surged, indicating limited immediate selling pressure from traders shifting coins to centralized platforms. Meanwhile, the recent adjustment in Bitcoin mining difficulty, which dropped approximately 10% in one of the larger moves of the year, reflects a contraction in hash rate as less efficient operations curtailed activity amid lower price levels and higher energy costs. Such difficulty reductions have historically preceded periods of minor capitulation followed by renewed network strength once prices stabilize, potentially setting the stage for improved fundamentals if the price holds or advances. Macroeconomic developments continue to exert significant influence on risk assets, including Bitcoin. Recent inflation readings have come in hotter than expected in certain categories, prompting markets to reassess the pace and timing of any potential interest rate adjustments by major central banks. Higher for longer rate expectations can weigh on speculative assets by increasing the opportunity cost of holding non-yielding instruments, yet they can also reinforce Bitcoin's appeal as a hedge against currency debasement over longer horizons. The resolution of certain geopolitical tensions, including developments around key shipping routes, has already contributed to short-term risk-on sentiment that lifted Bitcoin from its recent lows. Should broader equity markets regain upward traction and volatility indices remain subdued, capital could flow back into cryptocurrencies as investors seek higher beta opportunities within the digital asset space. Institutional infrastructure has matured considerably since the previous cycle, providing a more stable foundation for any potential rally. Beyond the spot, ETFs, the expansion of regulated derivatives markets, custody solutions, and prime brokerage services has lowered barriers for traditional finance participants. Payment companies and technology firms continue to integrate Bitcoin-related services, while nation-state and sovereign wealth interest, though still nascent in many jurisdictions, adds another layer of long-term demand. These structural changes mean that any upside move is likely to be supported by deeper liquidity pools than in prior cycles, reducing the severity of sharp corrections once momentum builds. At the same time, the increased participation also introduces new dynamics, such as sensitivity to traditional market correlations that were less pronounced when Bitcoin traded in relative isolation. Analyst forecasts for the remainder of 2026 and beyond reflect a wide dispersion of views, underscoring the uncertainty that still surrounds the asset despite its growing legitimacy. Some models project a return to the $100,000 mark within the current calendar year, if key resistance levels are cleared and ETF inflows resume their earlier pace, while more conservative estimates see a prolonged consolidation between $60,000 and $80,000 as the market digests prior gains and awaits clearer macroeconomic signals. Bullish voices point to historical cycle symmetry and the compounding effects of institutional adoption, suggesting that the next leg higher could ultimately carry Bitcoin well into six figures, and potentially toward new cycle peaks above $150,000 in 2027 or later. Skeptics highlight the possibility of further distribution from early cycle holders and the risk that regulatory or tax developments could create additional headwinds. What unites most serious observers is the recognition that Bitcoin's role in global portfolios has evolved from fringe experiment to recognized diversifier, making its price path less dependent on retail speculation alone and more intertwined with institutional capital allocation decisions. The potential for a mega rally also hinges on developments in the broader cryptocurrency ecosystem. Should Bitcoin successfully defend and break above current resistance, capital rotation into large-cap altcoins often follows, with assets such as Ethereum and select Layer 1 protocols benefiting from renewed risk appetite. Ethereum's ongoing scaling improvements and the maturation of its staking and restaking narratives could provide independent catalysts, yet the asset remains correlated with Bitcoin's directional moves in the near term. Regulatory clarity in major jurisdictions, particularly around stablecoins, decentralized finance frameworks, and custody standards, could further unlock institutional participation across the market. Conversely, any renewed enforcement actions or restrictive policy announcements would likely weigh on sentiment and extend the current consolidation phase. Risk management remains paramount in this environment. Even if the technical setup favors an eventual upside resolution, cryptocurrency markets retain their characteristic volatility, with daily or weekly swings of 5 to 10% remaining commonplace. Leverage levels, while lower than at previous cycle tops in some segments, can still amplify losses during rapid reversals. Investors and traders monitoring the situation would do well to track not only price levels, but also derivatives funding rates, options skew, and the pace of ETF creations and redemptions, as real-time indicators of underlying demand and supply dynamics. The $66,000 holding zone serves as a critical litmus test. Sustained defense increases the probability of a constructive resolution, while a break lower would necessitate a reassessment of near-term trajectory and could delay the start of any significant rally until more favorable conditions emerge. Looking further ahead, the interplay between technological advancement within the Bitcoin network itself and external adoption trends will shape the longer-term outlook. Discussions around post-quantum cryptography preparedness, while still early, signal that core developers are thinking proactively about future-proofing the protocol. Layer 2 solutions and improved transaction throughput continue to enhance usability without compromising the base layer security model that underpins Bitcoin's value proposition. These incremental improvements, combined with the growing recognition of Bitcoin as a potential reserve asset or treasury diversification tool by corporations and governments, support the case for gradual price appreciation over multi-year horizons even if short-term volatility persists. In summary, Bitcoin's ability to hold the $66,000 level amid a complex backdrop of post-peak correction, mixed ETF flows, and evolving macroeconomic signals represents a pivotal moment. The data does not yet confirm that a mega rally has begun, but the combination of cycle timing, institutional infrastructure, and technical support creates conditions under which such a move could develop if buying pressure intensifies and external catalysts align. Market participants will be watching closely for confirmation through sustained closes above immediate resistance and a return to consistent net inflows across investment products. Until then, the market remains in a watchful consolidation that rewards patience and disciplined analysis over reactive positioning. As we conclude this update, the cryptocurrency landscape continues to evolve rapidly, and staying informed through reliable channels is essential for navigating its opportunities and risks. For ongoing coverage of Bitcoin, Ethereum, and the wider digital asset markets, along with expert insights and data-driven reports, make sure to subscribe and return to Crypto Hub. Thank you for joining us, and we look forward to bringing you the next edition of our professional news analysis very soon.